So JJ, what's going on with the gig worker bill? It just passed the House. It was meant to punish Uber, but it's probably going to punish small business owners. A lot of people don't even know it passed the House. Have you been following that at all?
Well, if I'm following it, I really don't understand the drama over it. It doesn't even make any sense to me. I don't see how it ruins a small business owner or a gig worker in the slightest, because here's what it is. All it means is that you're going to get a 1099-K for transactions that you were paid on by credit card. But here's the thing. You've already committed fraud if you haven't reported $1 of income. So whether you get a 1099, whether it's a 1099-K or a 1099 miscellaneous or any 1099, you have to report the income. So it is silly. It is ridiculous. I don't know what the drama is all about. I kind of find it insulting when people say this is ruining businesses. It is ridiculous to say that at all. What it's doing is outing those that are not reporting all their income, which is fraudulent, starting with $1. Here's all it is. Before, a credit card company didn't send you a 1099-K unless you had run transactions through, and I think it was around $20,000. Now they're going to send you the 1099-K if it's over $600. Big deal. You should have been reporting the income anyways. Whoever's making drama out of this needs to cut it out, because all they're promoting is that small business owners should be able to commit fraud, which is wrong. So I couldn't be more strong on this, as you can tell, Josh.
Yeah.
This is ridiculous that they're saying it has any effect to small business owners. Ridiculous.
No, what I'm referring to maybe maybe a different provision of the bill. There was a bill that passed the House, which I know affected the financial industry. SIFMA put out an email. The bill that passed the House, it didn't pass the Senate yet, where the financial industry and others were seeking a carve-out. So I want you to use your powers of research on that bill. But if it's something, it's rather odd. It's forcing, so let's say in the financial industry or realtors, it's forcing 1099 workers to be then W-2 workers so that the employer pays into their Social Security wages. Maybe I'm calling it the wrong thing. There was a gig worker bill, which I guess is the one you're talking about, that I believe that was a part of the stimulus bill, Section 9674. I'm speaking about HR. I'll get you the number. It's a very alarming bill because it's basically meant to punish Uber. So Uber drivers are 1099s. And it's saying basically they have to pay them as W-2 workers, not 1099s. It was meant to punish the Etsy's of the world, the Ubers, but I guess to withstand lawsuits that would come, they made it applicable to almost every small business owner. So it's something that I want you to look at in the future.
Yeah, I will. There's two issues with the Etsy and the eBay. It's on the 1099-K that I had talked about. Uber already won, so I hear what you're saying. And the Form 1099 NEC is tied into that. And I hear what you're saying related to the definition, but definitely we'll take a look at it. But for the Etsy and the small business owner that's selling, they're getting a credit card transactions. That's the thing I was talking about.
Yeah. You should definitely be, if you're making income, 20 grand a year in your Etsy, and you don't report your income, that's a real problem. But let's say you made 20 grand on Etsy. What can you do this year to save on taxes last year? Well, you could put money in an IRA. I mean, it's simple. It's basic. But you have till when now? Is the May 17th, the May deadline now when you can put money in an IRA and get a quick write-off? Is that true right now?
That's right, May 17th. That's right, because the deadline got moved for the entire country. If you're in Louisiana, Texas, or Oklahoma, you have till June 15th because of the natural disasters that occurred.
So you have till May 17th to do a traditional IRA or a Roth IRA, 7 grand comes off your income. Also, what about, I had a question from a listener friend, and we'll get to it, about, let's say you have somebody making, I don't know, 75 grand a year. Do they still have that, credit where you get the savers credit? So you get not only the write-off from the IRA, but you also get an extra $1,000 or $2,000. What's up with the savers credit? Where are we with that?
Yeah, so it did get extended on the savers credit. Basically, depending on your income level, you can go to irs.gov to get the details related to it. But basically, they're giving you a credit, and at the beginning part of it, it pretty much offsets, meaning you're getting reimbursed for what you put into it. So the
up to how much? Up to how much?
Yeah, so it depends on your income level. That's why I'd have to say you'd have to take a look. There's a credit rate of up to 50% of what you'd put in. So really it wouldn't be fair to say, well, what is the dollar amount? You'd have to go, because it's a sliding scale in terms of determining what the dollar amount is. And so anyways, go to irs.gov, just put in the savers credit. I'm looking at it right now, and it walks you through in terms of how much you'd be able to qualify for.
And that's such a miss. I saw a comment from a YouTube guy who says, basically, how can I get ahead? The guy's been busting his hump for 20 years, 7 days a week, 24 hours a day, or, probably not exactly that, but, I'm sure he sleeps a little bit here. But he goes, how can I get ahead? Well, if he just maxed out his IRA for 20 years, he would be a millionaire. You don't have to be rich to max out your Roth or your IRA. So a lot of my stuff, people say, Josh, I'm not rich. I don't have a lot of money. What do? Put away $400 a month. You might say, but I'm 50. How do I, do it? Well, I want to think of some nice proverb like the long journey starts with a single step. What's that proverb? I love the Bible verse, do not despise the day of small beginnings. Meaning, just take that simple step. We got a guy, he goes, what does he say? He said something, I saw him before. He was struggling basically. And he was saying, I'm busting my hump. He feels kind of worthless and still broke. You know what, buddy? You're not worthless. You are a child created in the image of God, and you're not worthless. But with that attitude, you're not going to really amount to anything. So we want to make sure that you have a better attitude, number one. And number two, start putting money away, a couple $100 a month. Do it in an IRA, you get the tax credit. So basically, you're putting a couple grand away. They're giving you a couple grand, plus you're not paying taxes on that money. Or you can do the Roth where it grows tax-free and you get to pull it out tax-free. But there's hope for you, folks. Just start paying a car payment to yourself. Pay $200 or $300. You don't need a Benz. You don't need a Tesla. Get all these 20-somethings. I want a Tesla. You know what I drove when I was 20? Nothing. I drove my brother's old Hyundai Excel where the muffler was scraping the bottom of the street. And you know what?
I had to borrow my brother-in-law's car for a tax season, which was a LeBaron that was about 10 years old. I had a truck with no AC, but you know what? It builds character.
A LeBaron, that may be. Was it the John Voight LeBaron?
And did he wear Capizios while he drove it?
Couldn't even been that cool. Couldn't even been that cool.
The John Voight LeBaron. Do you remember that episode? That was funny. So I went from, but the pathway to wealth is often not elevating as soon as you start making a little money. And I'm talking 30 grand, 40, 50. Do not buy a new car. Run your car into the stinking ground. Take the $300 a month. Who are you trying to impress? Some woman that ends up leaving you because you don't have enough money? Because you can't buy the next high-end car? My wife loved me when I had nothing. And that's a good test of a good character of a spouse. So oftentimes, though, people go like, I'm 18 to 30. If we have 18 to 30-year-olds with no money, this is the time where you could save a fortune. But by the way, if you're 60, you could save a fortune. You don't need more than 30 grand a year to live. Food, clothing, rent. So if you make 50 grand a year, you could save 10 or 20. But people go, oh, Josh, I don't want to do it. Well, you know what? That's why you're poor. That's why you're broke. That's why you have the wrong spouse, because you're trying to spend money on them. People go to the bar every night. If you took that money that you're going to the bar or going to Starbucks and saved it, you'd be a millionaire. So we're going to be back. Sorry for my little interjection, JJ, but I was inspired by our comment of our friend who's feeling worthless and constantly broke. So broke is a mindset. And that's not just, personal power of, whatever that, garbage is on infomercials late at night. You have to start the journey. Long journey starts with a small step. Make that small step today, buddy. And you can do it. Pay yourself a car payment and you will, maybe not now, maybe not next year, but 10 years, you'll feel the benefits. So we'll be back after these messages with JJ the CPA and more questions. Up next, this is Josh Jalinski, the financial quarterback. Don't touch that dial. Okay, we're back with JJ the CPA. So JJ, give us some tips on how to save money for retirement. We talked about it, but break down some of we have the traditional IRA where you can sock away up to $7,000. We have the Roth IRA where you can sock up to $6,000 or $7,000. A lot of people don't do that. We said pay yourself a car payment. If you're just starting out, pay $300 a month, pay $200 a month, pay $400 a month. If you don't have it, pay $100. You have the traditional 401k if your business owner does that. You have the Roth 401k. You have the SEP-IRA. Talk a little bit about the SEP. It's a little known tool where people can get, you mentioned it, but just break down a little slower because meaning a lot of people don't realize you can put money away for 2020 and get a write-off. So if your accountant says you owe money this year, you can actually sort of it's like going back into a time machine to get an extra write-off when usually you should do year-end tax planning, but it's like you're stepping in a time machine. So talk about that.
Yeah, I tell you what, though, Robert of Philadelphia Salons, he's actually out of Florida, but a great fan, a great friend, and actually he was my one new client in 2020. I fibbed earlier. I said I don't take on any new clients. I take on one new client every year, but he is saying we're providing a lot of great value, so I appreciate that. And that's where this is such a great show that you're putting together, Josh, because you're bringing together other experts, and you've had some big-time experts on over the years and putting together this information for others. And this SEP that you're asking about.
Wait, real quick, before the SEP, I want to talk about the SEP, but these comments on YouTube are funny. Greg says the proverb is, how do you eat an elephant? One bite at a time. Just start saving something. And Greg's best comment of the YouTube, this is why you want to download the podcast weekly. You want to subscribe to our podcast on the iHeartRadio app. You want to make us bigger than Charlemagne the God. However, what's interesting here is Greg's comment above was probably the best comment about you, JJ. I remember when JJ had a cheap suit and a white board. That was like March of last year. And he goes, a lot happens in a year. That's the comment of the day.
Yeah.
And then June said, June is a listener friend of mine. She goes, JJ has a better desk than you. Now June is like a family member. I love June like a mother/aunt. And she sends me an email. She goes, "That's the desk you should have in your office." And, I'm very low on overhead. So it took me, I've been in business for like 16 years before I got a nice chair. So this chair that I'm sitting in is the nicest chair I ever had. Now you might say, well, it doesn't look that nice, but it feels nice. So, but it was the first chair I actually bought. I actually got all my office furniture from a mortgage guy who was going out of business. And I don't know, I paid him like $900. And then I bought a building, and it was an old bank, and they had old office furniture. I mean, people go broke on office furniture. So my idea was always like, I'm not going to spend any money on office furniture, but June may pull my arm, man. That desk looks beautiful. Yeah.
Well,
where can I get that desk?
Yeah, well, I appreciate that. I got it here, local Mathis Brothers. But I'll tell you, the first office that I had was literally 9 by 10. It was 90 square feet. And I got a desk down at the used furniture store. I took it and in the garage, sanded it down and painted it a mahogany. And I had that desk for 10 years. Anyways, I hear you. And but on this one here, this was I believe I got it when I celebrated I got it when I celebrated my 10-year anniversary of my firm, and I treated myself to that. Hey, so on the SEP and on the gig worker thing, I looked at it and I'm following it. I just didn't know it was called the gig worker bill, but and that's just because that's a slang. But on the SEP,
it isn't. It's called something else. It's like the but I'm worried about it because they thought there were going to be carve-outs. So it was just going to attack the Ubers. But it seemed like it was a big money grab. And the idea was, as people were abusing 1099s versus W-2s, and we're against that.
Yeah.
But what it's going to do is have an adverse effect of employers like me either paying their 1099s the same, and then the 1099 worker has to be paid more, or they'll be laid off because you can only have W-2 wage earners. So there's a lot of issues with that bill. I haven't read it or exposed it as much as you have other bills. So I think we could do some YouTubes on that. I'm really curious because we have to influence the Senate to basically smack this bill down or to significantly carve out it. Because what I'm reading, it's not good. But go into the SEP. Into the SEP.
So on the SEP, it is, as I would call, sexy. It is a sexy tax deduction. And why? For what you had said, which is the year is done. There's not much you can do to save taxes on 2020. It's pretty well done, other than what you mentioned previously. But with the SEP, it's something that you put money into it this year in 2021, and it yields a deduction for 2020. The SEP is also amazing because you can not even have a SEP today, but you could set up a SEP all the way until the extension of your tax return, assuming you extend it. So for a small business, they would have all the way until September 15th to put money in a SEP, all the way till October 15th for the self-employed to put money in the SEP and get a deduction for it in the prior year. How is it calculated? It's up to 25% of the self-employed income, and then up to 25% of the wages. Now, if you have employees, you have to do the same amount in terms of the percentage as you do. Now, of course, there are limits, and in 2021, if you're doing it for 2021, then the limit is $58,000, and then the limit for 2020, I'm trying to look at
$57K. $57K. Yeah, so, folks, that's a $57K deferral of income. That's incredible. So, if you want help, if you want to know if a SEP's right for you, give us a call. I also heard from our pension actuary that they changed the rules on defined benefits, that used to have to be done by December 31st. And now that is actually coupled with the other bill. Is that correct? Because that's huge too. Because you could do like a defined benefit pension plan, a profit sharing. Do you want to talk about that? There was some change in that.
Well, it's going to, yeah, obviously that's something where we need to have people do a consult with you.
Yeah. You can't do this alone.
People aren't taking advantage. But it's just what it's doing is, out of the act that came out at the end of 2019, it's just trying to make it easier and allow people to have a longer period of time to be able to put money in.
Yeah, the new deadline is expanded. So that was huge. So the CARES Act influenced defined benefit plans. And folks, if you want to defer more, you should look into defined benefit pension plans by giving us a call at 888-988-JOSH. If you own a small business, if you own a medium-sized business, and you want to help your workers set up a 401k, call us 888-988-JOSH. If you want to learn more about life insurance, annuities, stocks, bonds, ETFs, call us 888-988-JOSH. Don't go it alone in retirement. So as we conclude this show, man, this was a value-laden, action-packed show. What other parting thoughts do you have for our listener, my friend? Listeners. Our listener. My lone listener. Go ahead. Okay, we're wrapping up. Parting thoughts. JJ, you there?
Parting thoughts are, people need to call you, Josh. I mean, you are putting out good value. The way to act on this is to do what you're offering. This is what I like about Josh Jalinski, everybody, is that it's his morals, it's his ethics, it's the way he approaches business. And in some ways, I will say this, and hopefully everybody hears it correctly, you don't need the new business. You don't need it. You're doing it because you love what you do and you value the client. And then subscribe. Even if you're listening on the radio, go subscribe to Josh Jalinski. You're able to get this anytime you want on the YouTube for Josh Jalinski.
Thank you, my friend. And subscribe to JJ the CPA on YouTube, youtube.com. Just search for JJ the CPA.
The preceding program was sponsored by the Jalinski Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jalinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jalinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jalinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Advisory services offered through Wealth Quarterback LLC.